Good morning and welcome to Axis Direct Opening Bell, a quick pre-market briefing with key global cues, overnight trends, and market-moving insights to keep you ahead. We'll start with the global markets. Overnight, US markets closed lower, weighed down by weakness in major technology stocks. Hopes that the Strait of Hormuz would reopen faded, adding to concerns over whether the US and Iran can reach a broader resolution to the conflict. The Dow fell 0.34%, the Nasdaq dropped 0.6%, and the S&P 500 slipped 0.32%. Asian markets opened mixed today. South Korea's Kospi gained 1.17%, while Japan's Nikkei 225 slipped 0.17%. Australia's benchmark ASX 200 also moved lower, down 0.52% in the early hours. Nifty closed at 24,472 in a previous session, marking a loss of 112 points. The index witnessed profit booking after failing to break above the upper band of the short-term falling channel in place since August 3rd. Sentiment remained cautious as Brent crude surged to $90 amid uncertainty over the reopening of the Strait of Hormuz and fading hopes of a US-Iran peace agreement. The index formed a bearish candle with a small lower shadow, indicating buying interest near the lower end of the bullish gap area around 24,429 formed on August 3rd. For today's session, holding this gap support remains crucial for the market's near-term outlook. As long as Nifty sustains above this zone, it could attempt a move towards 24,600 and 24,700. On the downside, 24,350 remains the immediate support, followed by 24,198, where the 40-day EMA is currently placed. A decisive breakout and close above the short-term falling channel at 24,600 is required to revive short-term bullish momentum and signal a continuation of the uptrend. Dragged down by weekly derivatives expiry friction and fading US-Iran peace hopes that pushed Brent crude towards $90, key equity indices ended moderately lower ahead of the domestic CPI print. The rupee weakened 8 paise to 95.40 against the US dollar, while FIIs bought 259 crore rupees in cash, taking the monthly net inflow to 16,356 crore rupees. Nifty futures declined 119 points in a fresh short build-up, with open interest rising 1.0% to 138.5 lakh shares, adding 1.3 lakh shares. Bank Nifty futures mirrored the weakness, falling 296 points in a short build-up, with open interest rising 0.5% to 22.9 lakh shares, adding 0.12 lakh shares. Options remained call-skewed, with calls and puts added at 24,500, while calls at 23,900 and puts at 24,600 were unwound. Nifty PCR declined from 1.17 to 1.00, while Bank Nifty PCR slipped from 0.91 to 0.88. India VIX, however, fell 3.2% to 11.85 as option writers viewed the decline as a controlled structural correction rather than a systemic sell-off. The FII long-short ratio eased from 0.14 to 0.13. Net bearish FIIs aggressively sold futures and accumulated puts to ride the downside momentum. Short volatility proprietary traders aggressively wrote calls and puts to capture theta decay, while extremely bullish clients accumulated futures and calls, leaving them exposed to further downside. For today, watch 24,200 as strong support and 24,750 as major resistance. That's it for today. Please note that this podcast is for informational purposes only and should not be considered as financial advice. Please refer to our website for the full disclaimer. Thank you and see you in the next episode. Investments and securities markets are subject to market risks. Read all the related documents carefully before investing.